Hello, traders. It is Monday, February 19th, President's Day. I hope all of you are enjoying your three-day weekend. Let's get started with our analysis. As always, I like to start with our previous picks. That way we can review how the stock has performed, we can evaluate how effectively the system works, and I can gain your trust. Crowd, CRWD. That was my last long. We did that during the live event on Wednesday, and you can see the stock is basically where it was Wednesday. Not a big surprise because the market hasn't done much. Also in that video, one of the first times in the last few months, I highlighted a short. Apple was a short that I liked. We can see how the stock has been able to back off and fall through these major technical support levels, and it had breached both the 100-day and 200-day moving averages. So on a day trading basis, I liked Apple on the short side. We just needed to have weak conditions in the market. So on a very short-term basis, I am market neutral right now, and we're going to get into it immediately. Why am I neutral? I have been so bullish even since the middle of October, when we were still getting this last leg lower. We were looking for bullish trades, and man, has this been a nice run for us. But the market is starting to run out of good news, and it's showing some signs that it needs to pause here. So over the course of the next week or two, what I'm expecting to see is either sideways movement, which is a compression near the all-time high. Why would I expect that? And how can I be so confident that this is going to happen? Well, it's based on the price action that we've seen so far over the course of the last 3 months. This is a very, very strong upward move with very shallow, very brief dips. That tells me that buyers are in complete control. The market does not go straight up or straight down. It pauses along the way because it has to digest these gains. Along the way, there is going to be some profit taking. And as that profit taking starts to surface after a big move, it takes buyers a little bit of time to absorb that supply, and then once that supply is exhausted, you get another leg higher. I believe that's very possible right now, perhaps even to the tune of a 25% odds that we're going to compress for a week or two and then have that next leg higher. Another possible scenario is that we get a brief, shallow dip. What does that mean? What is brief? And what is shallow? Well, we better define that because that's going to be part of our game plan. And we can see that we've had some brief and shallow dips in the last couple of months. They don't last long. They last maybe 2 or 3 days, and then boom, buyers are right back because they are aggressive. They want to buy stocks. So we get one long red candle here, and boom, the market's right back at it, making a new all-time high. So these brief, shallow dips, this is what I believe is the most likely scenario. They are advantageous to us because we can evaluate the relative strength for stocks, and when that market pullback comes, we can look for mixed overlapping candles with tiny bodies, and that will tell us that the selling pressure is not very aggressive because every little dip is retraced. Every little dip is tested. Every little dip is challenged because buyers are looking for that entry point because they want to buy dips. And so when we don't have a very organized dip, there's information in that. And when we get that market pullback, we can identify stocks with relative strength. Why? How does that work? Well, because the stock would normally be pulling back with the market. And when the stock continues to march higher, when the market is having one of these little dips, then we know buyers in that stock are uber excited. They are super aggressive. And so when we get these little market dips, we shouldn't worry about them. We should expect them and we should embrace them. It means that when we start seeing tiny bodied candles at a relative high on light volume, that we know we're coming up on a turn. Just like in NASCAR, when you're coming into a turn, you take your foot off the accelerator. When you get around the turn and you're in the straightaway, boom, that's when you put the pedal to the metal. So we need to trade the cycles that we see unfolding in the market. And the price action that I've seen recently tells me that we're coming up on a turn. So that doesn't mean we get bearish. All it means is that we start taking shorter term trades and we wait to see what the market does. Are we going to get that compression near the high? If we do, I view that as being very bullish and that the market would have a lot higher to go. If we get that brief, shallow dip, that is also bullish, but not quite as bullish. So where might we retrace to? If I take a look at this 490 level, we have the 20-day moving average coming into play at that level. This is a horizontal resistance level. So we broke out, we tested it. So we've got nice horizontal support at that 490 level. I think that could be a reasonable level to pull back to, and then boom, we start marching higher. We don't want that dip to last more than a week or two. If it starts lasting longer than that, that would be a sign that there is resistance building and that sellers are starting to get a little more aggressive with their profit taking. If we see a more material dip, where might that take us? Would that take us out of a bullish market bias and shift us neutral? Well, the magnitude of the dip that I would be looking for and still feel very bullish about the market would be a VWAP-Q, right around that 480 level. You can also see how that coincides with this compression right here. We had a nice compression breakout to a new high, and then we had excellent follow through. So this would be a natural support level. And if we come down to 480, all right, now we've dropped about 200 S&P points. That's fairly substantial. And if that dip takes 3 or 4 weeks to unfold, not 1 or 2, but 3 or 4, that's another sign that the selling pressure is starting to build and that we need to take a more neutral bias on a longer term basis, on a swing basis. And that would be fine as well. It could still keep us in neutral to slightly bullish mode, but it's not as good as if we get a brief shallow dip, and it's not anywhere near as good as if we compress near the all-time high for a week or two, not even a dip, and then boom, right through. So this would be a compression near the high. So we already move off of this low. Tiny bodied candles. Okay, we're coming into a turn. Take your foot off the gas. Let's see what happens. Compress, 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 compress. Boom! Nice little breakout right in here. Stacking some green candles. This is where you want to put the pedal to the metal. This is where you can get aggressive with call debit spreads. This is where you wait and see what happens. So now we get this nice release higher, and you can see how that was a considerable move. Now we get a brief shallow dip. This is how we started the year, with 4 days of light profit taking. And then boom, one long green candle engulfs all of that selling pressure. All right, we're back on track. But because we had a dip, we hadn't seen a dip previously, barely even any red candles here. And as soon as we get a red candle, those are instantly erased. All right, we had a little bit of a dip. So it's not quite off to the races. We get another little retest right in here. All right, that results in another compression. This one's a little bit longer in duration, and the range was a little bit wider. So that tells us that at this level, there was a little more resistance than we had here. Now the market really lifts off again, and we're more likely to see a bit more resistance at the current level than we saw back here. So some of the momentum is starting to wane a little bit. So let's see what happens over the course of the next week or two. We're going to keep our trading very light. We're going to stick to very short-term trades, day trades, and we're going to monitor conditions, because what unfolds, that's going to help us establish our game plan going forward over the course of the next 2 or 3 weeks. Price action is all we need to follow. We don't need to follow the headlines. Yes, we need to know when those major news events are going to be taking place so that we can structure our trading against those major news events, and we can avoid getting blindsided by any potential big market move. Well, last week we had a couple of market moving events, nothing monumental. We had CPI come out and we had PPI come out. Both were a little bit hotter than expected. So good news is priced in. The market had been expecting the Fed to cut rates in Q1, which I thought was outrageous. There's no way. They just barely even paused, and now you're already looking for a Q1 rate cut when the economy is still strong? Why would they do that? They wouldn't do that. So they're going to evaluate current economic conditions. They're going to evaluate inflation, and then they're going to decide. But the job scene has been very, very strong. And in the last jobs report that we got, wages increased 0.6%. Whoa, that is a really hot number, and it's very inflationary because that's the largest input cost for manufacturers. So then we get CPI hotter than expected, PPI hotter than expected. Okay, that's not great for that scenario where the Fed would start to cut rates. And now the Fed has pretty much signaled, and Powell did this on 60 Minutes 3 weeks ago, so there shouldn't have been any guessing about this at all. He said, we are not cutting rates until midsummer at earliest. So the market's been expecting these rate cuts. The market's always addicted to easy money, and it's not going to get what it wants. Does that instantly put us into, oh my God, the Fed's not going to cut rates? That's bearish. I'm going to buy some puts. No. The economy is still doing really well. They don't need to cut rates. And that's actually kind of a good sign, because they don't see economic weakness that would prompt them to cut interest rates. They see the economy is on very sound footing, very stable, very few credit issues. So that's a good backdrop for us to work with. Now I'm going to do a little bit of fundamental analysis, but not much. And it's consistent with what we're kind of seeing in the marketplace right now. So first, I'm going to get into a little technical analysis. We just released a new version of Option Stalker Pro. So we're going to be doing a live event, and we're going to go through a lot of the new features that have been added. But I'm going to put up my watch lists. And the way that I have this structured is we have LRSI state. That is a variable that we can select. And you can see how it's either in a green dot, or it's in a hollow red dot, or it's in a red dot, or in a hollow green dot. Well, what does all that mean? So for those of you that use LRSI, it's a really good indicator. We can monitor it across multiple time frames. And so the way that LRSI works, and I do have videos on this, so please reference those videos on my YouTube channel, and then you'll understand what the indicator is and how it works and how we use it. But let's say that the indicator is over 80, that's bullish. That's going to be a solid green dot. Let's say that it falls below 80, okay, that's the start of a potential bearish cycle. You're going to see a hollow red dot, because It's not bearish yet, but it's starting to trend that way. And if it goes from below 80 to below 20, all right, now we're solidly in bearish territory. So we can monitor what the indicator is doing across multiple time frames. Solid red below 20. If LRSI pokes above 20, well, now it's starting a bullish cycle. So you would see a hollow green dot. And if it continues higher, goes above 80, it's going to go to a solid green dot. So we can kind of track to see what's happening with LRSI across multiple time frames. And what I have here are the 11 sector ETFs so that we can see how each of the sectors has been able to perform. Now, the one thing that I notice right off the bat is that we're not seeing a lot of solid green across all the time frames, which would be very bullish. We're not seeing that. And I also have real relative volume. So on any given day, and again, this is just my preference, on any day I can see if there is a sector that has a lot of volume coming into it. And then I have real relative strength for all of the ETFs based on a 5-minute, 15-minute, 30-minute, 1 hour, and daily basis. So I can also see if there's a lot of relative strength. And as I go down through the list, I can take a look and I can see, well, you know, there are quite a few sectors that still have green dots. That means on a longer term D1 basis, an H1 basis, they're still bullish. We would expect to see that with the market near its all-time high. But what we can also see is that the shorter term time frames are starting to deteriorate. We're seeing some red dots there. So that means it's like drawing, it's like a magnet, its weight put on these sectors. So on a temporary basis, some of that short-term momentum that we've seen to the upside, it's starting to wane. And so if we look at relative strength across all time frames, let's go right to the D1. Where's the strength coming from? So we can see XLI, we're seeing some strength in industrials, XLV, healthcare. We know there have been some pretty decent moves in the healthcare sector, so that's also not a big surprise to us. But if we start looking at technology, that's also been a leader, but it's been very concentrated. And so if we look at XLY is let's see, I'm trying to find the technology, there it is, it's XLK, excuse me. If we look at the technology sector, there we can see that we've had a pretty decent little pullback off the high. We go into the D1 chart, really nice big move higher, but it's starting to lose a little bit of its luster after a really big run higher. Okay, well, if that's been the leader, then we may want to tread a little bit cautiously. And this week we have Nvidia announcing earnings. Nvidia is now worth more than Google. Nvidia is now worth more than Amazon. Wow. And they've got earnings coming up on Wednesday after the close. So let's take a look at Nvidia, see what that stock is doing. And there you can see how powerful this recent move has been. It's all AI driven. Nobody really knows what AI holds in terms of potential for each individual company, but what they do know is that AI requires an incredible amount of computing power. Nvidia has the chips, and so all of these large companies are going to be buying these chips so that they can further their AI. Nvidia is definitely going to benefit from that, and that is reflected in the price of the stock. So this week, we'll see if the stock can live up to those expectations. Well, gee, Pete, the stock's run awful far. I think Nvidia is going to be a sell because stocks don't go up forever. When you get stories like this, I'll tell you that when I saw the dot-com bubble in 1999, 2000, 2001. Stocks like this can continue for a very, very long time, as long as there's a lot of enthusiasm for the stock, and that's on a retail basis and on an institutional basis as well. You don't even have to produce results for a while because everyone views this as the future. And so, okay, well, maybe this quarter was absolutely gangbuster fantastic, and maybe the stock's a little bit overvalued, but the dips are very brief and shallow. And as soon as the stock dips, it stages another leg higher. So I would not be out there buying Nvidia. I would not be out there shorting Nvidia. I would just watch to see what happens with the stock and watch all the other companies like AMD and all the semiconductor stocks to see what happens with the overall sector. If Nvidia falls flat on its face and we get a decent pullback in the stock, yeah, I think that's going to keep a little bit of a cap on the market. Is it going to keep the market from moving higher 2 or 3 weeks from now? No, I don't think so. But we do need to see some leadership in the other sectors. And right now, when I conduct sector analysis and I take a look at the green dots and I look at all the other time frames, I can start to see everything else is softening up a little bit. And that's consistent with the price action that I'm seeing in the market right now too. Light volume, gradual float higher. We don't have a lot of news right now either. So what are those major news items this week besides Nvidia? Well, we have the FOMC statement on Wednesday. Excuse me. Very important distinction. We don't have the FOMC statement on Wednesday. We have the FOMC minutes on Wednesday. Well, what light might they shed? Not a whole lot, because the Fed has been very, very vocal since its last statement. What's not going to be reflected in those FOMC comments is the very hot 0.6% wages increase that we saw during the last jobs report. What's not going to be in the FOMC minutes is the hot CPI or PPI data. So I think if anything, that tone will be a little bit more dovish than where the current Fed officials are right at this moment. But we know, do not expect any Fed rate cuts until July. Okay, well, that's what we're going to have to go with. That's the information we have. It's new information. It's not exactly what the market would like to hear. We had TLT broke down through this horizontal support level right here, and it did so last week. And so now we want to see what happens as it approaches the 100-day moving average. TLT is something we want to keep an eye on, because if it breaks below that support, bonds down, interest rates higher, not necessarily good for the market. So that will keep a little bit of a lid on it. It'll keep some of the profit taking intact. It'll be harder for the market to rally on that type of news. So I am waiting right now to see what happens over the course of the next 2 weeks, what happens with the earnings release from Nvidia. How is that going to impact the tech sector? And if we compress, cool. They tried to knock the market down. All this bad news, and the Fed is not going to ease. Buyers don't care. They want to be long, and so they are supporting the market. And we can expect the next leg higher. As soon as we get that breakout, I'm going to be a pretty aggressive buyer, because that is my most bullish scenario. We get that brief and shallow dip that lasts 1 to 2 weeks. I'm cool with that too. Let's see if we can flush out some other bullish speculators. Let's see if we can maybe attract some bearish speculators. When we have that support and they're forced to cover, we'll get another leg higher. But that type of price action will tell me that we're starting to see a little bit more resistance here, and I can't be as aggressive with my longs as I was back in here. We get a 3 or 4 week pullback to that AVWAP-Q. All right, well now we start getting into more of a neutral to slightly bullish environment. If you're an option trader, this is when you start considering selling out of the money bullish put spreads, and based on the duration and the magnitude of that dip, option implied volatilities are going to start to increase a little bit. That is good for us and for that strategy. And so we're still neutral to bullish. When we start testing these support levels and they hold and we start grinding back higher off of it, that's when we want to start selling our out of the money bullish put spreads. So hopefully this lesson gives you context on how to read the market. But my current bias and my current forecasts of what I believe is going to happen, which scenarios present the highest odds of actually playing out, that's all based on this price action right in here. It's not based on this price action. It's based on this price action right here. And eventually, as we start taking our foot off the gas and we're coming into these turns, one of these pullbacks is going to be more considerable than we thought. Okay, well, that's good information. Now we know that we have to expect a little bit more selling pressure. But until then, we expect this to continue. So compression or move higher, very likely. Small brief dip, very likely. Those are our two best scenarios. So let's take a look at some stocks and see what we've got. Again, I would be keeping my swing trades pretty much to a minimum in here. If you see something really compelling, a really nice breakout to a new high, heavy volume, post earnings, that type of stock, you're probably going to get some decent follow through the next day or two. So you can do some very short-term swing trades. You do not want to load up on those positions. So let me add that caveat. And you don't want to be getting super aggressive with weekly call debit spreads either, because you don't have a market tailwind. You should not be counting on a market tailwind. But if you wanted to buy these stocks, you wanted to hold them for a day or two overnight, you're probably going to do very well. You're not going to have to worry about the market rug getting pulled out from under you, but you're also not going to have much of a market tailwind. So I like the long side. Let's see what we can find. I'm going to go into my Green Royal Flush search, which is going to go right to the top. Eli Lilly looks fantastic. There's your earnings reaction. So the stock gaps up, they sell it off all day, tests the AVWAP-E, and now it's starting to lift off. I like Lilly, but this is also the kind of stock that's going to lure you in. And on Friday, you had this gap up, little pullback, and then zoom right to a new high of the day and starting to stack green candles. Well, if you start chasing in here, you're going to be disappointed. You get this long bearish engulfing candle off of the high of the day and some selling pressure the rest of the day. Let's take a look at what the market did on Friday. That'll also provide us with some clues. So we pull back on the open, establish the low, long bullish hammer off of the low. I'll be able to add that as well. And here we can see that it pulled back and we had a bullish cross here. I'd like to see 10P below zero and then crossing above. So we almost got it in here. So this is not the ideal setup for me to say, oh, 10P was down in a trough. I'd like to see it troughing way in here when we get this bullish hammer. But yeah, you get a bullish cross, so the market rallies up. It tests the high from the previous day. This is a tell. The way that it backed off of this high and broke below VWAP tells you that there is some selling pressure. If there weren't any selling pressure, this dip would have been brief and shallow. We would have gone right to a new high of the day. Green candle, green candle, green candle. Where have I heard about dips before? Where have I heard that the depth and duration of the dip might have some clue on where we're going in the future? It's a good example of it. So in here, you're like, that was deeper than I would have liked to have seen. So I'm long in here because the market's been bullish. We're through the high of the day. I weather this little pullback, but now it was deeper than I thought it was going to be. And when I get this release rally back to the high of the day, instead of being in go-go, gotta add to the position mode, I'm in, yeah, I need to tread a little bit cautiously in here because I did not like that. And so we get through the high of the day and now we're compressing. Take your gains up here. There's some danger. We're starting to get a little bit of a bearish 1OP cross in here also. A little bit harder to see without it moving so much, but right here you can see how it's above zero and it's starting to roll over a little bit. So yeah, you're taking profits here, not based on anything more than, gee, that dip was a little bit deeper than I would like to see. It broke below below VWAP. That's not what I expected. Yeah, we had a long green candle. We recovered this long red candle, but yeah, this is no good. This is not what I expected. I wanted that tiny little dip and then march higher. If I had that, then I could add on a new high of the day if we had good volume. So look what happens in the last 3 hours of trading. Pretty decent selling in here. Not a lot of volume, but some pretty weak price action. This is a sign of resistance. So we've got some selling pressure building that needs to be worked off. So let's work it off and let's see where we go from here. On a stock like Lilly, you can see that there was a little bit of profit taking there as well. It held pretty well. It held most of its gains for the day, even though the market finished lower than where it opened. Lilly finished higher than where it opened. And during that late day market sell-off, Lilly held up pretty well. Yes, I like Lilly. If you look at the price action, it tells you that this stock does not go straight up or straight down, so you don't have to be chasing in here. And this is the kind of stock that if I were trading Friday and I felt that the market still looked good, this stock is strong, maybe I take a small overnight swing position in Lilly, and if I get a decent market open on Monday or any strength in the stock on Monday, like a gap up like this, I might just want to take my profits right on the open. So late in the day, yeah, you could consider buying that for an overnight swing. It's a strong stock. TTD. Let's take a look at that stock. Really nice long-term breakout through this downward sloping trend line. You can see that's where the stock closed on Friday. Let's zoom out even more and see where those trend lines come into play. That is a long, very substantial trend line that dates back to 2021. Yeah, I pay attention to those. This one dates back to July of 23. Very nice breakout. Earnings after the close. I like TTD. It's a choppy stock, so I see that in the chart. What does that tell me? The stock did not close on its high of the day. The stock established that high and then it pulled back. Well, let's look at the M5 chart. And here we can see gap up, profit taking. Stock is able to recover some of that move off of the high, and then it gives back a little bit near the close, and we have this long doji looking candle right here, but still a breakout. We have very choppy price action in this stock previously. So this tells me this is a horizontal, was resistance level, now support, kind of coincides with this 1OTL line. Yeah, down in here, I would be looking for it to form support, preserve this gap. After earnings, I want to see 6, 7, 8 days of price action after that earnings announcement. If it can hold that low of 85.68 over the course of the next 8 trading days, yes, I would consider selling it out of the money bullish put spread on the notion that this horizontal was resistance, now support, is going to hold, and that the stock has this beautiful long-term breakout. That's how I would be trading it. and it's a neutral to slightly bullish strategy. And the market right now is flat. Could be quite bullish if we get that compression. We get that 3 or 4 week market pullback. It could be more neutral to slightly bullish. So we're going to know as that time elapses how we should trade TTD. But it looks pretty dang good right now. So at very least what I should do is to set an alert right here at the low of the day. Give me a reminder. If we poke through that, I want to know about it because this stock is on my radar currently. So let's see what else we got cooking here. Just going through this list. This is DG. Dollar General. Nice breakout through horizontal resistance. Still has the 200-day moving average to get through, so I'm not super excited about it. That's going to provide a lid for the stock, and you can see how this stock has tried to break out of this compression a few times, and it has been smack, 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 smack down. So with this overhead resistance, why the heck would I want to get long this stock? I wouldn't want to get long. So until it can get through that 100-day moving average, I am not interested. Let's create a rule. All right, so if the stock is through an SMA, the 100-day moving average, if it is above it, then I'd like to know. Let's add that and save it. I don't have to pay any more attention to DG. I have no position. It's just an alert. And I want to see it get through that level. If it can and the volume's decent, all right, I'm starting to move into this gap. I've got a series of higher lows. Got all sorts of good stuff working in here with AVWAP-E. It's above the major moving averages. It'll be above the 200-day. Yeehaw! Okay, I got something to look at, but I don't have to trade it. I don't have to watch it. And I don't have to hawk it. I just have to set my alerts. And if that alert goes off and the stock's got relative strength and the market's pulling back a little bit, I know this stock wants to go, and then I'm going to be looking for an entry point for it. Right now, just going to set the alert and see what happens. Tiny bodied candles, breakout. Tiny bodied candles, breakout. So this stock has a pattern of breaking out and then compressing. I like it. I think this is a nice chart. I like this horizontal breakout there, earnings after the close. This is nice. This is VKTX, Friday. What did the stock do when the market was pulling back? It marched higher and it held almost all the gains. It closed near its high on heavy volume. Okay. I really like VKTX. Do I have to trade it? No. Set that alert right there. And that alert actually, I didn't click on the right candle because that's what I wanted, was a horizontal price alert right at the high from Friday. Keep going in, taking a look at some other daily charts. Target, choppy, choppy, choppy. It is trying to grind higher. Retailers are going to start posting results. In fact, let's take a look at the earnings release date. So still March 5th. So we've got about a week or so before those retailers start to announce earnings. By the way, guidance on that could be a little bit soft. I think they did well into the holiday season. At least that's what I've seen reported so far. But the last retail sales number was pretty soft, and it came out last week. So let's just take a look. IR, really, this is just gorgeous, nice, tight price action after the close, earnings after the close. So for the person that came in here and went, oh, this stock has gone parabolic and this stock's going to pull back, I'm going to buy some puts before earnings. Well, you just got your head handed to you because those put options vaporized once the number was out and the stock moved higher. For you naysayers who think Nvidia is going to pull back really hard because it's moved so high, so fast, this can happen. It happens all the time. So I wouldn't touch IR here. That earnings reaction also, we had a bearish, it wasn't an engulfing candle, but the stock gave back all of its gains from the early high. This is APP. I do like this compression breakout. This is above all the major moving averages, above AVWAP-E. Looks pretty good. All right, so I'm getting a little bit long in the tooth here, and I'm going to be doing a live event with Harry on Wednesday, so I don't need to spend too much more time finding a pick since I'm a little bit market neutral. So I'm going to do more flipping, and I'm just going to look and see what I like. ABBV, choppy stock. I do like this breakout right in here. Earnings before the open, checks the AVWAP-E, moving through there. I don't want to chase, but this actually looks pretty decent also. And so far, and GE has been on another rocket shot here. That stock has been really strong. So let's find that stock that I want to get long. Right now, one of the better ones that I've seen, I like this TTD, but you've got to give it more time. I do like Lilly. Lilly looks really good. It's getting a little bit hot in here. On a pullback, Lilly could be good. Would I want to be selling out of money bullish put spreads on it? The option liquidity is not great. It's an $800 stock, so I'm going to find better for you. We've got AMAT. Do I want to be out there trading stocks and possibly considering some overnight swing trades in the tech sector? No, not when I've got Nvidia reporting. Right now, I want to hold off on those overnight swings. Can I maybe trade technology stocks before that Nvidia release? Yeah, I think you can. Kind of like this VKTX play. That's going to be my long. I have already highlighted IBM previously. I like it. Again, you've got Nvidia reporting. This is a bullish flag formation. I'd like to see it get through this horizontal resistance level. It's trying to do that right now. So I do like IBM, but I've highlighted it before, so I'm not going to have it be the pick of the day this time around. VKTX, I like it. It's a relatively inexpensive stock. You can buy the shares itself. You don't have to trade the options. And I like the fact that it's been able to rally up and hold this AVWAP-E and that very strong close on Friday with massive volume bodes well for the stock because it tells me that there are some institutional buyers in there. So that's your recap. Again, this is a holiday shortened week, so you're not going to have to wait very long for me to give you some more analysis of what actually plays out. We're going to be doing a live event on Wednesday. Please make sure to check that little live event tab on my YouTube channel because we have them every week. They're on Wednesdays. So just to give you a heads up. And we are also going to be doing a live event exclusively for the new features within Option Stalker Pro. So we'll be able to highlight those. Will and I are going to do that live event, and we'll be able to answer your questions. So if you've been wondering how you can configure Option Stalker Pro and customize it to suit your needs, that's when you can ask these questions. We give you that information and the questions that other users have, you might have as well. Thanks so much for watching, everyone. Good luck with your trading. Keep it light. Let's see what happens over the course of the next week or two. Let's see if we get that compression breakout. Let's see if we get that brief, shallow dip. Those are the most likely scenarios. That's what we're going to be looking for. And once we've had that support and we start to see that move higher, then we can start putting our pedal to the metal and start getting a little bit more aggressive again with our bullish picks, because that will be the sign that buyers are still aggressive and then the market is going to stage its next leg higher. We'll see you Wednesday. Thank you. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.